G'day, folks. Greg Silverman here, another session of Come Learn with me. Before I start, I do want to recommend you take a look at some work from a friend of mine. His name is James Eagle. You can check him out on LinkedIn, James Eagle, and his company, I think it's called Eagle Eye, with the I at the end, not the I. Anyway, check out, he does some phenomenal stuff. He's got great work. I love what he does, and I've actually interviewed him a while back on our podcast. Anyway, come down with me. Another article. Let's see. Traders sour on clean energy as bets against Invesco ETF surge. Okay. Souring on solar. Bets against the Invesco solar ETF surge. Short interest. Okay. Yeah. Short interest has gone up. IVZ is the ticker. A hot Wall Street trade is cooling down as supply chain chaos emboldens short bets against one of Invesco Limited's clean energy ETFs. With the green industry facing all manner of logistics snafus, as many as 9.9% of outstanding shares in the $3 billion solar ETF were on loan to short sellers last week, according to data from IHS Markit Limited. That's the highest level since April, when short interest reached 10.1% just before the fund slumped. The fund slumped 25%, sorry. TAN was a big winner from the frenzy into ESG funds that followed the election of President Joe Biden. But flows have dried up and it's on course to lose cash for the 6th month out of 7. That's proving a drag on the whole sector, with clean energy exchange traded funds overall set to see asset declines for the 2nd consecutive month, according to Bloomberg Intelligence. The global solar industry is confronting a slew of challenges, from logistical headaches like elevated freight costs to supply chain disruptions stemming from tensions between US and China. Costs have jumped this year, creating a double blow for companies that face both a drop in demand from consumers and reduced margins. Investors may be concerned that solar companies aren't really in a place to solve the short-term issues around policy uncertainty, trade uncertainty, as well as general macroeconomic trends, said Paul Lexano, an analyst with Bloomberg NEF. The headwinds add to a roller coaster year for TAN. Investors flocking to products with higher environmental, social, and governance standards spurred assets to a record $5.2 billion in January, but they've pulled back amid bubble fears and to ride other market trends like cheap value shares. The ETF is down 18% this year after surging 234% in 2020. Wow. Yeah. Just one thing I'd like to say about the whole ESG thing, which I think is fantastic and it should continue. It's totally noble and I appreciate it, but it is an investment thesis like any other investment thesis, which is going to get crowded over time. But there's a lot of money to be made before it gets crowded, and you never quite know when it is crowded. So that's my 2 cents worth. Other funds that focus on clean energy broadly, such as the iShares Global Clean Energy ETF and the Invesco Wilder Hill Clean Energy ETF, have also fallen this year, while short interest has not jumped in these products to as high a level as TAN's. Inflows have slowed dramatically or reversed. Interesting. Very interesting. The solar companies have long traded at very high multiples to revenue as well. All right, guys, interesting article. We'll keep our eye out on TAN for you. Greg Silverman from the Taj Mahal, out.